Ready to elevate your credit understanding and score? With insider tips and a plan, you can take action to improving your score, which can save thousands in unnecessary finance charges. Let's tackle today's topic with your coach, Credit Christy.
Hey friends, it's Christy, your credit coach. Thank you so much for joining me for another episode. Today, let's debunk a few credit myths. Over the holidays, I actually got a few extra minutes to hang out on social media, and I couldn't help but feel kind of taken by some people that were sharing what I feel like, in their opinion, might be good financial education, but some of the things that I saw that people were posting out there really blew my mind. So it got me thinking, there is so much information soaring around, but it's hard to know what is truth and what is a myth. So I know we've got to be very careful and cautious on who we listen to, but also what is in it for them. In other words, are they trying to sell something like a credit repair service or leading you to believe that you can become a multimillionaire overnight if you just sign up for this business or just buy this, crypto or whatever is on the other side of that offer? And I welcome your questions. If you have a question on something and you're just like, is this accurate? Is this true? Does this make sense? I am happy to respond to you on an email. Just send it to me at questions@creditchristy.com. So let's dive in and debunk a few credit myths. First, I've seen some people say that checking your credit score can hurt it. And let me just define and explain checking your credit score. If you are checking your own credit score, there is no hit to your score. And here's why. There are two types of credit inquiries. There's a hard and a soft. A hard inquiry is when you are literally applying for credit. This could be applying for a new loan, like a car loan, or a mortgage, or a personal loan, or applying for a credit card, or asking for an increase in a credit line that you already have with an existing credit card. All of those are examples of a hard inquiry. Can that hurt your credit? Yes. The next question you may have is, how much will it impact my credit? Well, if you haven't had any recent hard inquiries, then the impact to your score should only be a few points. If you are applying for a number of different things, a couple of credit cards, a new car loan, a new personal loan, now you're applying for a mortgage, those are all examples of different types of credit that you're applying for, which could make you look like a credit risk. So in that case, every time you're doing a different kind of credit inquiry, it could have a larger and more substantial impact each and every time. So that couple of points could turn into dozens of points each time. So be careful. Also know this, you are allowed to shop. So if you are shopping for a car loan, a mortgage loan, or a student loan, those are protected. In other words, you have a window of time in which you can shop different lenders for the same purpose, and it all falls underneath that initial hard inquiry as far as the impact. So I'm a mortgage loan officer, and as such, if somebody has done a loan application with another company a week or two ago, I can explain to them that by applying with me will not have a further impact against their credit score because that inquiry is still inside of that window of time. So according to the credit bureaus, you have up to 30 days, but my experience with one of them has been more like 2 weeks. So try to keep it at 2 weeks of when you are applying for the same type of credit, shopping for a car, a home loan, or a student loan. Now, when you check your credit yourself on an app or through Experian or Credit Karma or something like that, just keeping an eye on your credit profile is not applying for credit. It's simply referred to as a soft inquiry. Also, if you're changing insurance companies, they're going to inquire, or you're opening up an account with a utilities company for like water or electric because you're moving, they will also do a soft inquiry. Those examples will not negatively impact your credit score. There's no impact to your score for that. So you can check your score every single day if that helps you feel more relaxed about what's going on with your credit. So before we leave this topic, keep in mind that a hard inquiry will stay on your record for 2 years. Once that drops off, you might see a little bump in your credit score. I've also seen people giving advice that closing old credit cards can help your credit score. And this, unfortunately, is the opposite of the truth. You want those older or aged credit cards open and active on your credit profile because One of the determining factors of your overall credit score is your length of time with credit. So what if the longest held open trade line, remember credit cards, loans, all of those are referred to as trade lines. What if it's 10 years old and you go and close that and your other trade lines are maybe only 1 or 2 years old? Well, that can have a negative impact on your credit score. So I encourage you to keep those credit cards open. Now, if they charge you a big annual fee or something like that, I don't want you to incur having to pay to keep it open, but most don't. Also, if it's a credit card, that will help towards your debt utilization. So in other words, if you have a couple $1,000s limit on that credit card and a zero balance, that helps your overall debt utilization. So the best advice is to keep those credit cards open. Don't close out those old credit cards. I've also seen somebody talk about how your income affects your credit score. And friends, your income is not reported anywhere on your credit report. It's not on your profile. An employer could be listed, just like your addresses that you've lived at and names that you've been known by is listed on your credit profile, but not your income. Okay, I've recently seen one where she called it like a 315. And she said when you make a charge on your credit card, pay it down by about half 3 days after you've made that charge. And then know when your statement date comes. So let's say your statement date is the 30th of each month. She was suggesting on the 15th of each month to pay that other half, and that it is somehow reported to the credit reporting bureaus that you've made 2 payments a month, and this is going to impact or help your credit score. And friends, that's not true. The credit reporting bureaus hear from each creditor literally once a month. It's usually somewhere around your due date on when you're going to pay that debt within a few days. It's not reported several times a month. So unfortunately, this is not going to help your credit profile. And if you don't believe me, ask on Google if this is legit, and you will see several articles that back this. A gentleman from FICO.com and also a spokesperson for the CFPB, Consumer Financial Protection Bureau, supporting the fact that that is a myth. So pay your bills on time. When it comes to credit cards, pay them as often as you can, trying to keep that balance as low as possible. I know I use mine for my daily bills, my groceries, my gas, my utility bills, all of those things. And then I'll go in and pay it, I don't know, maybe once a week because I don't like keeping a balance. So just make sure that you pay your bills on time. That's the most important thing, is your payment history. That's the largest portion of what makes up your overall credit score, and it's something that you definitely have control over. I've heard people say paying off a loan such as a car loan can help improve your credit score, and I'm calling this a myth. If you've had a car loan for 3 or 4 years and you pay that baby off, guess what happens? That on-time payment history that's been reporting month after month just ended. Your payment history is really based off of your open and active trade lines. And a portion of what your overall credit profile and score is made up of is a credit mix. So let's say you have 2 credit cards and a car loan, and that's it. You pay off that car loan, you don't have a great credit mix now. Overall, there's 2 types of trade lines. There's installment, which is like student loans, car loans, mortgage loans, personal loans, that have a set payment each month for a designated amount of time. And then the other kind of trade line is called a revolving trade line. Those are credit cards and home equity lines of credit. And it's revolving because you get to say what the balance is, upward or downward, paying off that balance or going and charging against that line of credit or that credit card and increasing that balance. So it's constantly a changing or moving number. So if you only had 2 credit cards, revolving, and 1 car loan, installment, and you ended that installment loan, well, your credit mix is now off. And that trade line that you've had for 3 or 4 years with on-time payments is no longer benefiting you as far as that payment history. So if you're getting ready to apply for something really big, like say a mortgage, don't make major changes without talking to your loan officer first to ask, should I pay this off? Should I do something different here? And let your loan officer advise you on what to do. I heard some people on social media saying that a debit card helps build credit. And friends, a debit card does not report to your credit profile anywhere. Credit cards do. Debit cards attached to a checking or savings account does not. Another myth, you need to go into debt to build credit. So I can say that most of what shows up on your credit profile is debt, right? It's loans and credit cards. But that's not to say you have to go into debt in order to build a credit profile. Work to have a credit card that you just use because of the rewards, the points, the protection, but not necessarily to carry a balance each month. If you've listened to any past episodes, you may have heard that story I shared about when I used my debit card at a gas station and there was a skimmer device. And it took months of fighting with my bank after somebody took hundreds and hundreds of dollars out of my account. I had to work with the fraud department. It was a terrible mess. If I'd used a credit card and disputed those charges, that would have been remedied much more quickly. And think about it this way, because I know from past experience, there's been times in my life when I didn't have 2 dimes to rub together. So what if I didn't have any padding in that checking account? And now I'm facing not being able to pay my housing payment or my car payment or something along those lines because some jackwagon stole money out of my bank account via my debit card. So a credit card can also provide an additional level of protection. And it's a little easier to dispute wrongful charges. So if you utilize it properly, you're not going into debt. You're just utilizing a credit card to pay for your everyday expenses and then paying it off so you're not accruing interest charges. And what about that credit mix I just talked about? Well, there are a few different types of programs out there that will report your payment history without having you go into debt. For instance, there are companies such as Rentler.com and lots of others just like it, where for a small charge, they will report your rent on your credit report to help you build a credit profile. So your on-time housing payment is showing up as an installment loan payment. And now you got this on-time payment history reporting, and you didn't go into debt for that. You're making that payment in your life anyway. Another myth is that married couples share a joint credit score or a shared credit profile. And that's actually not true. When I pull credit for a married couple who's applying for a mortgage loan, their 2 individual reports get merged onto one report, but it's listed as their separate debts. In other words, I can look at that credit report and tell if it's spouse 1, spouse 2, or a joint debt that both of them have signed for. And they each have their own credit scores. So being married doesn't make you take on your spouse's debt or smush it onto your report. They can be merged on one report, but it shows up as spouse number 1, spouse number 2. It's just on one report for the purpose of simplicity, but could be separated out because you don't take on your spouse's trade lines. They're your spouses, just like yours is yours, but they can be shared on one data point with their individual credit scores for each of them and their debts listed out underneath each of them. I hope that made sense. And then finally, having a dispute on your credit can't hurt you. Well, that's not actually true. So I see a lot of these quote unquote credit repair companies, which they make me crazy, talking about how they can go in and clean up and remove late payments and collections and all sorts of other things from your credit report. A lot of times what they do is they go in and they dispute everything listed on your credit report. But here's where it can hurt you. Let's say you're buying your first home and you're going to utilize an FHA loan. One of the guidelines for an FHA loan states that if you have a dispute on a collection account and that collection account balance is greater than $1,000, that dispute language has to be removed. It cannot be there for what's called automated approval. A lot of times when you remove that dispute language, first of all, it could in some cases take up to 30 days because you have to work with that creditor. The creditor has to update the bureaus have to update that information, and it can be a long process. And if you're in the throes of getting financing approval and trying to buy your home, a lot of times you don't have 30 days to wait. And the other side of that coin is a lot of times when you remove that dispute language, guess what happens? Your credit score can go down because having that dispute language basically removes that collection out of your credit score algorithm because it's saying, hey guys, this may not be accurate information, so let's not include it in there. And that is why the guidelines state to remove it. Because if you had terrible credit in your recent past, and you had collection after collection after collection, which is a reflection of your inability to manage money, pay back some debts, or make payments as agreed. And so you've got these collections listed that could reflect an inability to manage your money. So if those were all removed out of the calculations of your credit score algorithm, well, that's kind of providing some false information to the system. So lenders and underwriters have to do a really good job of protecting themselves and limiting the risk, which is why they rely so heavily on a credit profile and credit scores. It's not just about the credit scores, although that is part of it. Different types of loan programs have minimum credit score requirements. And most often, the higher your credit score, the better the interest rate versus a lower credit score. And that's why it's so important for me to share this information, because the number one reason for mortgage denials is related to credit. Insufficient credit, poor credit history, low credit scores, something along those lines. So I am passionate about making sure that people get the education that they need to make wise decisions about how you show up on paper via your credit profile. Having a lower score costs you so much more in interest on all of the things that you borrow for, such as credit cards, auto loans, mortgage loans, personal loans, and in some cases, even student loans. But how can you win a game if you don't know the rules to the game? So by leaning in and learning all you can here and from other trusted resources, you can then start putting together the right action steps to have the best credit profile as possible. If you see something on social media and you just don't know if it's legit, either follow your gut or reach out to me. Send me an email, ask a question. There's no such thing as dumb questions. And I'd rather you ask and get some important information your way to make the right decisions versus you not knowing the right information and maybe falling for a myth. Well, friends, that's all I've got for you today. Thank you so much for sharing this time with me, for listening. And if you know of a friend that could benefit from knowing more, having a better understanding about credit, please share this show with them. And could I ask a huge favor? Would you give this podcast a review? I've only got a few out there, and I'd love for more people to know what you've gained or learned or gotten from the information I share through this podcast. It'd mean the world to me. Thanks so much for listening, and until next time, my friends, stay well.
Subscribe now and share with a friend to stay in the loop for new credit content and insider tips to maximize your credit knowledge. And follow Credit Christie on Instagram.